So for yen, I think this is very similar. While this is quite a big example, and the price just went and went, uh, like hundreds of pips upside. It is not normal. It's not going to happen every time. The general target would be much less. So still, this is very high returns. Risk to returns is almost 11 that we are seeing, and the price just kept climbing even after that. But even that is not a very long trade. It's just about uh, 24 hours or so. So this is not even going full, like it's going overnight, but it's not going too much. And even if we close like intraday, that is I think still yielding a lot, like 5 or 6 hour return. So I think, yeah, that's some of these opportunities I'm going to go through. So as you can see, this is 7th October, and the trade before that was 25th September. So for a long period there, almost 10-12 days, we don't have a trade. And like I mentioned, this is very rare, even more so than the other ones, and that's again giving like quite 100 pips, as I mentioned. Again, before that, the last opportunity was on the short side, but it was way back on 16th of September. So there's again a considerable gap of 9-10 days for one single trade on USD JPY. Then again, the last one before that was 8th of September, and then before that 20th of August, and before that, yeah, we are not going that far behind. So yeah, so that kind of creates the pattern of how many trades that we can expect or something like that. Some of these trades were good, but they didn't actually uh, meet the necessary criterias. So there was still some jumbling up of things, so which would negate us from taking this trade. But it obviously tested the 200 and moved up and all. Discretionary decisions can be made, but strategically, I think this would not be something that should be made norms, because that would create like strategic impurities. If we take this, we'll take something bad as well. So to keep it clean, to only take, I think the accuracy we are seeing is happening only because of the patterns that we are seeing. So the tests have to be, the lines have to be in order, and we are seeing the same thing on Euro JPY as well. Uh, it's a very rare occurrence of trades. So 9th October, the trade, it's not a big trade, 35 pips. That before that, 2nd October, then before that 30th September, then before that 24th September, then before that 17th September. So there is considerable gaps in between those trades for GBP as well. So we had one today, I think earlier in the morning, and we had one yesterday. But if we go back before, there's not much, not many trades. So will will be, it is not, so the last one before that was the 18th September, then 10th September. So there are considerable gaps between these trades, so they will not keep us too busy, so that we will be able to focus on what is at hand on crypto, what is at hand on our indices trading, what we are doing anywhere else as well, on all the other stuff as well. It will not create a considerable, take considerable time away from us, but still give opportunities like this, which are quite huge compared to the risk. So if we compare it to the risk, so target is 100 pips, but I think the risk compared here is like 10, 15 pips. So there is literally no risk in these trades, and we are trading a considerably high risk reward. And for that reason, I think this is a very clear way to scalp the market and just ride some trades every once in a while. We just wait for the things to align. We just ride that momentum, that short burst of momentum. So this is again 9 a.m. to 3 p.m. in Indian time. So on the same day, it's completing. We are pro- taking the profit, and we're getting out. Nothing else. And yeah, that's about it, I think. the strategically, I think this is much less trades than gold. So it's less complicated. But three assets, I think, combining, we can get one or two trades per week, including three assets, not individually. Including three assets, we can get 1 to 2 trades every week, which should be enough for, in my opinion, on the FX side. On this approach, we can have a different approach. Which we can discuss later. Obviously, the viability of the Asian range break, we cannot say that it was not there, because that strategy also seems to be working. We just need to find an executable pattern, more mechanical way to do that, and maybe fine tune it more. So this approach can simplify our job. That approach can stay the same. And some seasonal approach can be there if someone expert FX is coming in. They can help on that basis too. So that's about it from this USD JPY, Euro JPY, and GBP JPY side. Obviously, CHF JPY, AUD JPY, and NZD JPY are also there, which I didn't get into because the video would become too long. But they are doing the same thing, the same kind of opportunities that we are seeing here, because the markets are narratively more bullish or bearish on the yen pairs compared to the other FX pairs, which generally tend to be more cross. So even in yen, we see these periods of crossness, but these are more common in other FX pairs and than the yen pairs, which make it very difficult for us to scalp. So to scalp these opportunities, one could say that we could scalp the bottoms, but how do we know that bottoms are going to stick when things like this happen, the inducements happen? So that's not a feasible way to scalp. The feasible way to scalp would be to ride the momentum, which we are trying to do here. So yeah, that's about it from my side. I'm including a note as well. So please check and let me know. Thank you. Have a good day.